Will M&A bounce back in 2014 from a dismal 2013? Joining me is Jim Freedman, Chairman of Intrepid Investment Bankers. Thanks for joining me.
Thank you.
So to get to the point, will M&A activity bounce back in 2014 over 2013? And why was 2013 dismal?
Well, the answer to your question is absolutely. It's not even a question anymore. And that is because 2013 suffered from the tax law change that went into effect of higher capital gains taxes. So most sellers that wanted to do a deal did it in 2012 because of the lower taxable capital gains. And as a result of that, 2013 has suffered because a lot of that business went into 2012. What we have today is a tremendous amount of capital, tremendous amount of equity, tremendous amount of debt, unprecedented levels that we haven't seen before, with not a lot of deals because of what got sucked into 2012. And now what we're seeing for the last 60 or 90 days is a whole resurgence in new clients for ours, which is a 6 to 9 month lead time before they actually get done. So 2014, I predict, will be a very, very strong year for M&A.
You know, some folks are saying there could be a rise in interest rates. You don't think that's going to have an impact on deal activity, is that correct?
Well, not at the rising levels that we're talking about. We're at historically very, very low levels. So if interest rates rise, even a couple points, we're still way below historical standards. So rates would have to rise substantially before it really has a material impact. It's not like buying a house where a half a point in a mortgage rate will change behavior. It just doesn't work in the corporate world like that.
Now, Intrepid, you advise in a number of industrial sectors. What are some hot sectors in terms of deal activity that we can focus on in the second half of the year, do you think?
I think you're going to see a lot, for example, in building products. It's an area where the economy is now coming back. You're starting to see good growth. You're seeing a lot of companies that have gone public in the last couple of months, HD Supply and Plygem. These are all building products, distributors and manufacturers, because the hope and expectation is that now we've started the recovery and we're in the first inning of a 9-inning ball game. So we're seeing a lot of traction in industries like that have been severely hurt in the last few years, and now people think it's their time.
Thank you so much for joining me.
Thank you, I enjoyed it.
And that was Jim Freedman, Chairman of Intrepid Investment Bankers.